All right, guys, how we doing? Sam here with you. It's Tuesday, March 12th, and as I remind you, we poll the members, let them choose what gets analyzed here. And first up, by request, here's a look at the dollar yen. Now, I've got a daily chart up here. Now, before we get into this, my suggestion, this particularly for members, before I give you a count here that I think, well, let's put it this way, it's valid, it's technically valid. I'm never here to propose that my count is the count, as is always the case. Well, not always, but often the case. With Elliott Wave, there's some subjectivity to it, as it could be counted multiple ways here. So my suggestion is always to have a primary and at least one alternate. So if your primary is invalidated or the structure or the symmetry starts to break down, that you have an alternate that you can quickly go to. It's just a good habit, particularly for an Elliott Wave trader. So just my suggestion would be to take a swing at this, or see if you can come up with a count that doesn't violate any rule set, and see if you come up with the same thing I do. I think, as I said, there's a couple of different ways it could be counted. But I'm going to take you through my primary here. So on that, here I've got the 2011 lows all the way through our 15 highs. So I mean, pretty clear. We can see it, all the subdivision here. Really nice impulsive structure over 4 years. This is why I remind you that the opportunity in FX is so substantial because of the fact that these markets trend, and they can trend for many years. So lots of opportunity here if you can get yourself positioned, and then the real challenge is letting it run, right? I'm not saying that I bought the 2 here and took it up to the 5. It's just, remember that once these trends start, if you've got a major pivot down here and you get something like that, implying that the 5th, now it would have been, so you never know, right? So you could have been sitting here thinking, oh, 1, 2, 3, 4, 5, good. Oh, but given the shallowness of that retracement, so just for the sake of conversation, let's say you saw the triangle here in the 4 and you took this little pop and then you see it start to come down. It would have been very easy to think, oh, well, it looks like the top's in here. Now, of course, you'd be relating that to prior swings here. There could have been, well, let's do it. Just out of curiosity here, just to show you that this is kind of the blessing and the curse of FX here. So look, you bump right into the golden zone. That's where we back off. Right? I actually had not drawn that up before, but that doesn't surprise me at all. So you could have easily been thinking, oh, I caught the 4 into the 5. The thing is over. Well, now, of course, you'd be anticipating, you bump into the golden zone. Okay, well, the other algo kicks in. They're going to take it down. So you'd have been thinking, oh, well, at least we're going to make the 50. That would be the tendency here for a wave 2. That's the most probable location for it. Well, when we take out this high, you know that you're wrong. So what would be your next conclusion? Because it's certainly, we're not correcting the 1 through 5 here. What does that leave? Well, the only alternate would be that that's a 1, 2, and then you're going higher. Now, again, would you have known where it was? That's where you got to use judgment, some symmetry here, looking at relationships between the prior swings. So, right. So, I mean, there's a little bit of benefit of hindsight here. But if you were trying to project for where that 5th might end, well, you can just use the same tools we would do in any circumstance. So, if this is the 4 coming out of that triangle. Well, again, here, this would have been easy to assume, oh, we got to and through the 2618, which would be an extreme for the 1 projected from the 4 low. Well, I'm going to guess you wouldn't be disappointed if you caught that kind of a move there. Maybe you caught this little retracement thinking, oh, well, 1, 2, 1, 2. You got the 3. I mean, that's damn near a 3-month trade that you're in. I mean, just a hugely successful trade. If you caught that and thought, oh, looks like it's backing off, perhaps that's the 5 here. You get this little shallow retracement. We go again. What's the alternate? The only option is, whoops. Oh, trading view. Oh, I hate that feature. We go up here and you think, oh, well, I've got another little triangle here. So this has most likely, it never has to be, but most likely I've got another little triangle going in here. Right, and then kick up for the 5. And so the probability of buying the 2 or even the 4 and then riding all the way to the top, very unlikely. There's just too many opportunities here along the way where you would have thought, oh, shit, that's it. Oh, I got to bank some profit, or a trailing stop gets taken out. I'm not saying you're going to buy the 4 and you're going to ride it up to the 5. What I'm saying is, recognize that once one of these trends start, if your primary or whatever you think is happening just continues to expand, don't find yourself thinking, oh shit, man, well, it can't go that far, can it? We can't go past the 2618. By the way, look here. One more reason to think that this would have been a high probability candidate for the 5th. Symmetries, it's a little shallow, but note as you hit 100% the length of the 1 projected from the 4 here, you hit that as you hit the golden zone. So if you were in the 4 to the 5, shit, I'd have taken profit there. But then the reload is actually right here. That looks like a clean 50. So you cut the 3. Just kind of taking you through it, right? And again, guys, I recognize very easy to do in hindsight. I'm just trying to make that point that the purpose of having these alternates is so for example, if something keeps going, well, you better be quick to go, oh, well, what could it be? What's an alternate? Well, what if it breaks that high? Or we don't retrace the 50? Right? What else could be going on? So you got to ask yourself that. Well, here we're on a daily chart, right? But at some point you got to say, well, what's the alternate? What could it be? Maybe the 5's not in. So indeed, it wasn't for a long way. All right, now coming down to the right edge here as we get down to the business of what I'm sure people are looking for, with some sort of analysis of where we are now. So let me clean this up a little bit. So here, this is no question. This is a difficult count here. So you've got the impulse here. So once we start down and we start breaking some of these levels, and given the fact that we get 5 in the 5th here, so you've got a lot of things to suggest that the trend is done here. So we go A, B, C. Well, of course, from the low here, we're looking for the second, right, our high probability range between the 50 and the 618. We come back to the prior 3, 4 here, right to the damn near to the pivot, right where it broke out. So we get a clean retrace here, and we've got all the subdivision here for an ABC, and we've got a clean 5 in the 5th of the C to get you a second down here. So now you're looking at that thinking, oh, okay, well, the 2's in. I've got a perfect, beautiful impulse. Got a little bit of a, the symmetry is not ideal, but the subdivision is so good, we come right to the 50. So your first thought would be, okay, 1, 2. Well, now over here, see, it would be easy to think of, it'd be easy to think of this as a triangle. So you might be thinking, oh, what's the big deal? I got an A, B, C, D, E. You're thinking, oh, I got a triangle. Or, well, actually, it would be A, B, C, D. Well, let me read it. Sorry, guys. So you might be thinking, oh, I got an A, I got a B, I got a C, I got a D, I got an E. Up we go. What's the big deal? Well, the problem with that is we cannot. It's a hard rule, not a guideline. We cannot have a triangle in the second. So you can't put this over here as the second of so an A, B, C, D. You can't have it. Right? It's a hard rule. Can't have a triangle in the second. We can have them in corrections, but we can have them in force, but never in a second. So you gotta rethink that and go, well, what else could it be? Well, you work through the subdivision a little bit. Let me go down to a 4-hour here, and we'll break this down a little bit. All right, now this is definitely a tough one here because there's been so many false breaks. Can I do it 4? I might have to do 8. Do an 8-hour here. We can get a better look at it. So the first problem you have is, what do you do with this? Right? This is very difficult. It looks corrective. So you get the little pump into the 1, A, B, C. You're thinking that's the 2, and it may well be. But you're losing some subdivision. The problem here, so you can see the yen has been prone to these extreme spikes. Here, see it here again. So with the depth of that retracement, I'm more inclined to think you've got to go 2 here. So you've got to go A, B, C into the 2. Here's your little triangle zone here for the 4. So it's not the prettiest one here that I've ever seen, but it's, whether the 2 is here and then you've got to go 1, 2. The problem is it goes up here, up and then down. So I think you got to go 2 here. 3, very tiny little 4. Now I am on an 8-hour, right? So there's a little triangle in there to give you that 3, 4, and then there's the kick to the 5. So it looks like you can get a 1 here, but then this is where the complexity kicks in. So it looks like we get a flat within a flat. So let me open this up a little bit. So I can get, yeah, I have a diagonal here. So I can get a leading diagonal into my A wave here. A, B, C into the, so I've got A, B, C into the C of the B here. Right? Then I get the 1, 2, 3, 4, 5. So I get a zigzag here to start out with. So where's my, so I start here and I get 5, 3, 5. So there's my zigzag into an A wave. Well, then I go through this chop, and because I can get 5, 3, 5 again, I get a zigzag into the A wave. Now it gets a little tricky down here. There is an A, B, C into the B, and then you've got it. Well, let me open it up here. I know it's a little tough to see, but you've got to go A, B, C into the B here, and then this move down creates the C of the B. So you end up with, let's see, so this becomes a flat as well. So here's the A, here's the A of the B at this degree. So we go A, B, C of B. Okay, so we've got a zigzag into the A, 5, 3, 5. Now we get a zigzag into the A, so I go 5, 3, 5. Now I got a little bit of a wonky B here, but as this has to be corrective to accommodate this, you got to go A, B, C. Then I can go 1, 2, 3, 4, 5 into my C of my B. Right? So I've got A. So on the larger degree now, let me do it this way. I'll change that color. Okay, so on the larger degree, I've got this now. So let's put this back in white. So I get A into my B down to my C. So that gives me the A, B, C of candidate for the 2, right? So it's pulling back out here. So here's the larger degree. So here's the larger degree 2 here in white. Here's my 1. Here's my 2 of this degree here in blue. Come here. All right, so 1, 2. Then I get a leading diagonal here. All right, yes, I've checked it. So the third, so the extension's in the 1. The third is longer than the 5th. Well, here, I'll show you. So you just grab the length of the 3. Come here. Project it from the 4. Just barely, right? Here's 100% the length of the 3. So the 5 is shorter. So we have a leading diagonal with the extension in the first to give me a 1. Now here's where it's problematic because of this wick that spiked down and was immediately rejected. We do come back down to this area of prior support here, and I'm just using these. I'm going all the way to the left. I'm just using the prior support here. These are a couple of wicks. So here's this pivot. You can see how these are respected here. So we come down. This is demand. We come to demand, and it's immediately rejected. Now, yeah, it's close, right? So, but we do not overlap this pivot here. So we have a candidate for an ABC. So obviously, it's very deep for a 2, but as we don't overlap, it can play. So I can get a 1 ABC into the 2, implying that I've gone 1, 2, 1, 2, and it looks like we're in the process of putting in, well, what would most likely be yet another 1, 2. So that would be, so we'd have the larger 1, 2 in white here. Then we'd have the 1, 2 in blue. Then we have the 1, 2 in green. All right, so all of that is incredibly bullish. Right? I mean, for those to all resolve, even just this, right? All of these 1, 2s, all implying higher prices. So you look at that and you think, all right, so dollar stronger, yen weaker. You know, that's what you're implying. That this count is implying that the dollar will stay stronger than the yen for the significant future. It's a tough count. Now, there was one other thing in here that I thought was worth noting. It's just a good example of a median line trading principle. So if you look here and we open this up, there's a few spots here where just whenever I see 3 pivots, I'm going to be quick to check the median line. So if I go A, B, C here, let me get that right on that. Am I on it? Pretty close. Okay, close enough to make the point here. So remember, median line trading principle number 4, a failure to make the median line. So this, it looks maybe a golden. Let's see. So from the A to the B. All right, so we get a golden corner pocket here. Do you see it? All right, so here's your golden. Now, that has 80% probability of making the median line, if that, assuming, right, the caveat is that this pivot has to hold. So, right, as I remind you every time that I can, this is the single best odds in trading. Right, golden corner, 80% probability of making the median line. Well, you get damn close, but you don't make the median line. Well, fortunately, for students of mine, you know trading principle number 4, a failure to make the median line is a sign of strength, sets up a move equal to, or greater than the move that failed to get there. Exactly equal to. And down we go, right? Great example of it. So we can't quite get there. So you look and go, what's stopping it? Was there a fib? Was there something with the fibs there? Right? It's a little sloppy. They break the golden zone. You can see defend, but they break it. So so it's interesting here. So you've got a break of the golden zone here. Now, if it's playing as a 1-2, that's not problematic for the count because a 2 can go, well, anywhere from the 50 to 786. That's your high probability zone. But it's interesting that the failure to make it sets up a move exactly equal to the move that failed to make it. Interesting. So this is a sign of strength. So as that moves away, particularly as you break the downsloping here, and because there is a count that gets 5 down here, I think that's significant, but just a good example of it. So with that little tidbit acknowledged here, so now we've we'll talk about stuck in a range here. So we've got, what's interesting here is that the spikes are breaking the golden from this side. All right, so we're breaking the golden zone on this side. We did it twice, but on wicks that were immediately rejected. So it may play into the, so the algos are, so this algo gets stopped out. So well, I take that back. This algo right here gets target. Do you see? Well, there's the green line here. Do you see? Let's see. If I wiggle this, do you see that green line right there? So if I put that there, so they get their target right here. So the algo gets it, right? This guy gets their target right there. Right now it gets a little sloppy around it. So that algorithm has already been paid. Right? This algorithm that would have been buying here, that starts buying here at this 50, they get stopped out. These guys win it. Meaning that now there'll be an algorithm that will be defending that will, so I'm getting it. Confusing you. Okay, so let me get this. So meaning that the next algorithm will sell at the 50, so you can see what they did, right? So here's the sell with the intention of getting here. Here's the defense, right? It's just a great example, right? So you can imagine it's so technical in here. It's insane. So you see this algorithm footprint all over the place, both sides, every time frame, from the weekly to the 30-second. You're going to see it over and over again. So here, just a good example of it. So here they're selling here at the 50. That's the reaction at the 50. Here, so they don't get target, right? Now we go to 618. Here's the defense at the 618. Ultimately, it breaks. So these guys get stopped out here. What's the next thing they do? Well, the next thing they do, well, they're going to pull from here, so they get stopped out again. Right? Now, do not feel badly for them. They make so much money. You don't need to worry about that. So here from the low here, they'll just keep doing it. This is what they do over and over and over again. So they're just going to take the next 50 because sooner or later they get on the right side, right? And then they can get 3, 4, 5 of them in a row. So this will be looking for this pivot up here. But note how the golden zones are really framing the market here. So we have all of this complexity of an Elliott count, but the basic structure, you could make the case we've just gone 1, 2, 1, 2, and looks like maybe we're in the process of doing just another 1, 2. So per this count, if this low is good, we don't know that that's in, but 1 could be in, 2 going in, 3, 4, 5 still yet to come. So is that done? Well, it's hard to say. No way to really know, but the subdivision looks like you've got another extension. So maybe we look at it on the hourly. Pardon me, what I want to say. I want to say it looks like we have another extension in the first, well, given this wick. Well, so yes, this is always a problem when you have a spike like this because it just distorts your count. Well, let's see. So often what I'll do is I'll use the lowest pivot prior to where, so we have one wick here that all of this is done just within that wick. So I'll use the lower pivot here and see if that clears up the count. So if this is 1, so we could go 1, 2, 3, 4, extension in the 5, maybe. Looks like this could be, let's check here. be more inclined to think that this would be a 3. So maybe we've got 1, 2, 3, A, B, C for the 4. 1, 2, 3, 4, 5. So that could be done. I have to wait and see. So yeah, so it makes the retrace a little problematic. So I would check here first rather than use the extreme. Now you got to really use both, because here's the last pivot right here before we go up after this spike wick. But remember, an algorithm will not care. It will use that. So we've got to pay attention to that as well. So note here we get this little confluence zone here where we've got the all the way. So an Elliott trader might be saying, that's throwing off the count a little bit. I'm going to use the prior pivot here just as a candidate here, just potential, knowing that you'd be putting a question mark on that because you're being forced to use a higher pivot. But you'd have to also check from the swing low to the swing high so that you're looking for confluence. Well, here's the 38 and the 50 at confluence, and here's the golden zone and the 50 at confluence. So if I'm looking now thinking I've got 1, 2, 1, 2, 1, 2, 1, 2 coming in, well, take note here. I also have the events noted on the chart here. So we have financial reports coming in the next few days. Well, we're really going through the remainder of the week. So we have reports here that could impact the market. So what we'd be looking for is something along these lines to bring us down here and then set that up. Now that may or may not be the result here from some of these reports and their impact on the dollar yen, but if they're significant to the US market, or to the dollar, right? You can see all these are US based. High probability that you're going to get some volatility based off of that data. So the potential here for the 2 to kick in, well, that's going to have to be negative to the dollar, obviously, to bring this down. But it sure does set up a nice spot down here if that's in, which is, it's not gorgeous, but you've got 5 here to finish this. So you could go 1, 2, 3, 4. Looks like that would be your 5. You can get that to play. Let's go down to something manageable. All right, so looks like yep, looks like we can get that to work. So again, is that the A coming down? It's a tough call here because of the sloppiness here in this one spike wick. So again, I'd use both of them. Here's the one you really want if we can come down here. So we're going to need a fairly good sell-off here if that's the A and the B going in. Here, right, the symmetry looks interesting here. This is going to take an extension in the C wave, right, which is not terribly uncommon, but something like that. If I'm just trying to lay out a roadmap, I'd certainly have an alert here. So if I hit that 50, well, you've got some structure here as well. So all of this area here was prior resistance, may kick in as the support. So then what are you using? Well, if you take this one off, come here. You take that one off, well, you're still only at the 38. So using the lower pivot, something like that may be in play. Well, but so you say, well, shit, how are you helping me? Well, there are just some times when you look at a chart where you just can't put together a roadmap with a high degree of certainty. We have to see what this looks like. Is that the B? Hard to say until we see this start to come down, break that low, and do we get a clean 5 coming down to set that up? And if we do, and all the appropriate conditions are there, you've got the subdivision, maybe a little divergence in your oscillators, you've got all of the ingredients, but it's certainly there. And if you can catch that 1, 2 here, well, remember, as I said, we took you through the count, 1, 2, 1, 2, 1, 2, 1, 2, you can't get much more bullish than that. Right? Because all of those, if they're all going to a third, they're all resolving much, much higher. So an interesting spot. So there's really, so is there a trade there? Well, I wouldn't take a short going into all of that data because the potential, we haven't even made much of a retracement here, so there's no way to know if that B is in. I wouldn't do it with all of this data coming in because, as always the case with Forex, you're trying to get positioned around one of these major pivots and then not get stopped out because of the volatility that surrounds release of data, which will often create spiky trading action. So I would let that data pass, and then you'd have a little more to work with here, so you'd have more certainty as to whether or not, do I have my 1 in here? Are we done here? Are we done here? Is this just going to end up to be maybe you're looking at your alternate count, which is there's more complexity here. Maybe this just plays as an ABC. and we go down again. Well, now you'd be into a combination of a WXYXZ. That is the alternate, but I'll spare you going through all of that. But see if you can come up with an alternate based on if this starts to break down, because the base structure here, it's not a great looking impulsive structure. It looks a bit more like it could be corrective. Now, also the possibility here that we're just retracing here and there's another kick higher. Right, so you can't eliminate that. So you can see that the impulse is right here. So we can get the impulse here. So is it 1, 2, 3, 4, 5 coming? Well, if the dollar moves higher against the yen coming out of this data, well, now you'd be rethinking it. And like, where's a likely target? Well, there you got an algo target and you got your golden zone right there. So the whole thing moves over. Now this moves. All of this moves over here. And you're teed up again, looking for the characteristics of a correction to bring you down here. And now you're trying to catch the 3. All right, guys. Boy, went kind of long there, but there's a lot of complexity in this, as you might suspect. Very technical trading, and a bit of a challenge. See, even if you just watch through this, you won't remember it all. So pull up a blank chart. Start on the daily and see what kind of count you come up with. See if you can come up with 2 counts, a primary and an alternate. Not going to be easy. All right, with that, guys, I'll wrap them back. Got one more to do today, so I'll be back to you in a bit.